Thanks for joining us for our third installment of these deep dive sessions. The objective of which is for all of you to get to know our business better, but importantly to get to know our key managers better as well. We thought that little marketing warm-up was a good place to start because obviously, I'll say this, it's by design that we identified that we've made some good progress. We have a lot further to go. We know that. But we do think that we've laid the foundations for really good, healthy underlying growth in all of our markets. Today we're talking about retail. And we're talking about retail because it's an extremely valuable business for our bank. It's a core business for our bank. It's one that we've been in from the beginning of time, although obviously it's evolved substantially. When we look at when I look at the way people describe Standard Chartered when I first arrived, it was often referred to as a wholesale bank with a little bit of a retail tag on. And I looked at it and said, that's an interesting way to describe it, because actually what I see is a profitable retail business with a black hole on the corporate side that is sucking and destroying value at a tremendous rate of pace. And obviously we've addressed that. You heard from Simon a year ago. We've got very concrete plans to get that C&IB business. Simon has subsequently added responsibility for the commercial banking business to his portfolio. So the corporate business is under Simon. We've done, I think, a lot of work to get that business to the point where it's poised to create value for shareholders. Not quite there yet, but we have a very clear plan on how to get there. The retail side of the business is already creating value for shareholders, and especially when we look at our key markets, where we've been strong for quite a while, the returns and growth are both outstanding. So the objective today is for you to become more familiar with this business. Many of you are quite familiar already, but you'll get the color of also seeing the management team in action. The host for today, the chaperone, the driver is Ben Hung. You all know Ben. You heard him talk about the Greater China North Asia region last year, which clearly has been a very strong producing and performing component of our portfolio. And you'll meet the rest of Ben's team. Ben in the retail role is relatively new. Ben stepped into this position at the end of last year when Karen Fawcett retired. Ben has shaped up the strategy and is shaping up the team. It's a work in progress, as you'd expect. And we had a debate earlier in the year. Do we want to have this meeting in May before we've rolled out every bit of change that Ben might want to roll out, or do we want to get on with it and talk about this as we're evolving the execution of the strategy? Obviously, we've chosen the latter, and for good reason. So what you can expect today is to see something that is marking the evolution of this business over the past couple of years that Karen dutifully, with the team who you'll see today, and all of them to one degree or other, have dutifully led. And you can expect to see some more evolution as Ben puts his imprimatur on this business, and as we learn what we learn, and as we discover what we discover. Bottom line, we think we have some key differentiating advantages in our retail business. We have a very strong brand in most of our markets. It's an aspirational brand in most of our markets, not all, and we can talk a bit about that. We think we have a wealth management proposition that is differentiated. One, by the fact that we're substantial in these markets. Second, by the fact that we're open architecture / objective. We're not manufacturing our own wealth management product. We're identifying and sourcing what we think is best in market. We're delivering that to our clients in what we think is an objective way. It differentiates us from a number of our competitors. And we have key synergies with the rest of the bank. There are obvious funding synergies and capital synergies, but in some cases, more importantly, there's client synergies. So as Ben will go through, a significant proportion of our new-to-bank affluent clients are coming through employee banking arrangements where we have an undertaking with our corporate clients for them to effectively steer their employees to Standard Chartered Bank. This is a great area of growth for us. Likewise in partnerships, et cetera. You'll hear about that in a lot more detail. But we also know, per our friend Usain Bolt, that we're not fully there yet. Somebody is going to go faster in this organization, and we think that the people going faster will be the people that you'll be hearing from today. We are not yet world record holders, and in fact, we're quite away from it. We're not as efficient as we need to be end-to-end. We're not as optimal and optimized in terms of our funding mix and our generation of liabilities as we need to be. We don't have all the talent that we'd like to have, and we aren't as digital as we'd like to be. But we have good foundations in each of those areas, and it's along the lines of that recognition that we get really excited about the prospect for this business, going from a cost of capital plus a bit return now to a real outperformer that's generating good, strong underlying growth. We see tons of low-hanging fruit, if we can call it that, or upside more specifically. So with that said, I will turn over to Ben, and I'll be around with Andy and Jose and others from our management team. We've got Michael Goritz running Tech and Ops, Jason McDermott, I see, who runs compliance, corporate affairs, et cetera. So you've got a number of our management team colleagues together with IR. I see a couple of non-executive directors as well. Jasmine Whitbread and Pam Wogden, our head of HR. So please engage with us fully and extensively over the course of the day. The intention is to be as informal as possible to get to the things that you want to talk about. Thank you.
Okay, thanks very much, Bill, and thanks very much for joining us this afternoon. I think I have met a lot of you, but in case we haven't met, my name is Ben Hung. I run the retail and wealth management business for the bank. I'm also the regional CEO for Greater China and North Asia. This is my 26th year with the bank, so I've done a lot of different roles, but the retail business is actually, to me, it's a very, very exciting business. It is a better returning business. It uses a lot less capital. It produces stable, sticky, and deployable liquidity for the bank. And it also produces a less volatile income stream. As Bill said, this business is already delivering a return on equity in excess of 8%, but we do believe there's more to be had in this business. Now, let me turn to slide 4, okay, which is the retail banking investment case. A few factors here I want to highlight. Number one is we are in very attractive footprint. Effectively, all of our businesses are in the dynamic markets of Asia, Africa, and the Middle East, where the revenue pool is expected over the course of next decade to double. We also have very strong distinctive differentiators, particularly, as Bill said, we believe we have a very strong wealth proposition, which is where the brand that we stand in many of the markets resonate the most with our clients. And we are already recognized in 7 out of our 8 top markets where we are seen to be the best in class in terms of international bank. We do have a clear strategy, a strategy which we believe is already delivering results. Markets where account for 2/3 of our income in aggregate, these markets are already delivering an ROE in excess of mid-teens. We're working very hard for the rest, really underpinning by our continued pivot towards affluent and emerging affluent segment. And finally, we are investing in our future. Many of our efficiency save initiatives have afforded us to invest in excess of or roughly around $1 billion in cash over the last 4 years, primarily focused around improving our digital wealth and infrastructure platform, and these investments are already delivering improvement in our client experience. And if we take all these factors together, we are confident that this business is capable of delivering a return that is in the mid-teens over the medium term. Okay, so this is our investment case. Slide 5 is really what you will be hearing from us today. As I meet many of you investors, I get usually a few questions. Number one usually revolves around why should clients bank with you? What are your differentiated proposition? I also get a fair number of questions around, are you subscale in many of our markets? How do you compete with local players? Then I also get asked, how comfortable and confident are you in ability to drive down your cost-income ratio? And finally, it's always around how does technology play? Will they disrupt you? Will they disintermediate your business model? So hopefully, over the course of today, we will get some of these questions answered. I do have a management team here sitting there who can add towards whatever that is not being covered afterwards. Now, on page 6 is essentially who we are, okay? As a retail business, we have around 9 million active clients across 30 markets. Roughly 2 million of the 9 million are in the segments of priority, premium, and business segments. And these three segments combined actually account for around 2/3 of our income. We have around 1,000 branches across our footprint with around 30,000 staff. If you look at the makeup of the products, it's a well diversified set of products, but it's actually each of these products sort of draw and support one another in terms of our, as a client segment proposition, led by wealth management at 30%, followed then by credit cards, personal loans, deposits, and mortgages. And then if you look at it from a geographic lens, the biggest slice comes from Greater China and North Asia, but there are also a lot of large and exciting markets, both in ASA and AME, where directionally it should provide a very good source of income diversification for our business going forward. Now, coming back to the question of why do clients bank with us? And there are three main reasons we see it. First, and perhaps the most important, is we are a well-trusted brand. In many of our markets, as you know, we are established for well over 100 to 150 years, and we are very much a well-known and well-respected household name in all these markets. And this very international brand, coupled with the local heritage, actually provides a very, very strong appeal to the segments we want to focus on. Second, we have a very strong customer value proposition, particularly around us being that international provider as a trusted advisor, and providing a very, very good platform to help our clients in terms of their wealth and asset diversification needs. As Bill mentioned, we are truly an open architecture, unbiased provider, because we are not engaged in any form of product manufacturing, not in bank assurance, not in fund management. So customers like our objectivity, like our unbiased support and advice. And third, we have been investing quite heavily in the areas of digital and product proposition, and customers are also responding very positively to our relationship management approach. And taking all these together, I think we are increasingly being recognized, and that's being shown on the right-hand side in terms of Net Promoter Score for our priority clients, and they are seeing us as being that very top international bank provider in the 7 out of 8 markets, as we highlighted here. Now then, moving to slide 8 is around technology. Naturally, technology is changing the way our clients interact with the bank. As you would expect, people use our branches less, and they will use our non-physical channels through digital, through online, a lot more. As we speak today, roughly 90% of our clients interact with us through either online, mobile, or ATM. Okay, we expect that to continue to go up. Now, technology obviously is affecting the entire industry, but we do see both challenges and opportunities, and we're well cognizant and well aware of the risks of new entrants, be it a fintech, a platform payer, in terms of how that evolves into our footprint. And from our standpoint, we have to make sure we invest heavily into customer touch points and omni-channel experience, so to make sure that that client journey is being well served. From our standpoint, branches still have value. They are particularly of value in terms of the higher value, more complicated advisory solutions, and we do see that the value of that. We will be rolling out a brand new configuration of branches globally, which will turn us into more versatile, more efficient, less service, but more advisory-oriented type of configuration. So we're rolling that out. We are shifting a lot of the servicing type, the solutioning orientation towards our contact center. But most importantly, we are investing into digital hopefully to both have an end-to-end solution in terms of client origination as well as end-to-end service fulfillment. These are some of the areas we're investing heavily. We are also very aware that local regulations in each of our markets play a very, very important role in terms of how markets play in terms of the whole digital space. And we are operating closely also with fintech, big tech companies to make sure that we stay close to what's happening on the ground in terms of the local regulatory environment and make sure that we are in the game of the digital world. Now, the right-hand side, simply we're an early stage, but we do see some very, very encouraging results in terms of what we've been investing in and some of the output that's been coming out. Now, turning to page 9, I've tried to put here some of the cornerstones of our strategy, which was laid back in late 2014. And fundamentally back then, we had a business which was more focused around unsecured, sold through third-party sales channel, towards pivoting towards one that is more focused around wealth, deposits, and targeting towards the affluent segment. And I'm quite happy to show in each of the 5 core pillars of our priorities highlighted then that there has been very, very positive progress. I mean, starting with priority client segmentation, we have been seeing very, very good CAGR growth in priority segment clients, which it's being highlighted here. It went up from, used to be 27% of our income deriving from priority segment. Now it's 45%. We have done a huge amount in terms of cost efficiency, whether it's through headcount, whether it's through number of branches, whether it's through square footage, that has come down by approximately in the neighborhood around 20%. We are redeploying these efficiencies to invest in digital, as I talked about, and we will cover more shortly in the later slides. We have also reset our risk tolerance. We have brought back some of the perhaps over-concentrated concentration and unsecured. And now we're in a much better shape now. We're starting to resume targeted growth in this area. The last last point is we did highlight back then we do have some more challenging markets. And I would be quite happy to report that in the 2 markets that were highlighted back then, which is in Korea and China, we have shown significant improvement in terms of the losses that were incurred back then. It was roughly losing around 370 million back then in the year 2014. And last year, we brought that loss down to 70 million. We have more markets to work on, but at least it's a good demonstration that we're focused at it. We have that capability to turn around some of the more challenging markets. On slide 10 is a very, very quick summary of our financials over the last 4 years. Now, I must say the headline numbers, as you see, mask exactly what I was describing, the underlying progress that we have been delivering underneath these numbers. This business now, particularly in the income and the mix in the client segments, is of a far higher quality, more sustainable, and more focused around the areas that we have a competitive advantage in. The cost remains flat despite accommodating a very significant and substantial level of investment in our businesses. Now, the cost of risk impairment has also been brought down. And as you can see, we are now using a far lower level of RWA and therefore capital to generate the same level of profitability. And we do believe after securing these foundation steps, we are now poised to drive further improvement in returns through better and higher quality growth in income and profit in starting year 18 onwards. Slide 11 is a slide that I borrowed from Simon Cooper's CIB Day, which I shamelessly copied. But these are the 6, I would say, ingredients or components through which we believe we have the capability to drive better return. I cover them one by one briefly, starting with slide 12. Okay, as I said, we are in very exciting and dynamic markets. The this chart shows the amount of wealth that is being created or will be created. There will be, over the next decade, 2 billion of population joining the middle class, and we estimate that the banking wallet derived in our market will go from 750 million to 1.5 trillion, primarily driven by the affluent and the emerging affluent segment. And the population that we are serving will be shifting from saving to investing, and therefore that inherent need for wealth management advisory solutioning will increase. And that really underpins why we are pivoting our business strategy to capture this very macro and structural shift in terms of wallet size going forward. And we believe we are making sure that we are well positioned to capture this macro shift. Now, next couple slides are important ones as it shows how and where we are choosing to compete. Okay, let's first take a look at the segment lens. Okay, this highlights the 4 segments that we are now serving, starting from priority, premium, personal, and business. Priority is a segment that we believe is where our proposition, our brand resonates the most with our clients. Not only, as you can see, is this segment producing a far higher income per client, the quality of that income is also a lot better. 80% of that income is coming from wealth and deposits, which is not capital intensive. And so you can deduce that this is actually a very, very high returning from ROE standpoint segment that we are very, very keen to pursue. The premium is equally important because this represents the feeder pipeline towards our priority. And as you can see, they are going through a different stage in their life cycle, where mortgages, they are probably in the stage of home building, etc. And that's why mortgages is actually the biggest wallet. And we are this year planning to launch a new premium proposition across 7 markets in our footprint, in our core geography, just to make sure that we're well positioned to capture this emergence of affluent segment. The personal is by far the largest in the number of clients. Now, by personal, the way we look at it is this would be the kind of upper mass segment, okay, which predominantly, if you look at a product perspective, it's predominantly coming from the revenue coming from credit cards and personal loans. This is the area where we have done quite a bit of review around our risk appetite and risk tolerance. We've done our portfolio review. We are actually now in a far better position after a couple of years of that de-risking, and we're now poised to grow. And the way going forward is we're very keen to use digital to acquire, to serve, and we are also very keen to use this as a filter towards ensuring that we capture the future emerging affluent segment. Okay, that is around our personal clients. And lastly, business segment is also a very, very good segment. It is primarily liabilities-led. It produces a very, very strong liquidity provider. It's a low RAD ratio, and it also feeds very well to the overall bank's ecosystem and supply chain. So that's also a very, very important segment. Now, if you put everything together, I'll be very, very clear that to my team as well that, look, we cannot be all things to all people, and we do not intend to be all things to all people. And we, in markets, in geographies where we have good market share, including likes of Hong Kong, or Singapore, and many of our African markets, we're quite happy to address or focus on a wider piece of that segmentation, all the way from priority to personal business. In markets where we have less market share, less relevance, less scale, then we have to be sharper in our focus, have a stronger pivot towards the emerging affluent, and the usage, a stronger usage around digital to make sure that we have a lower cost to serve. So this is the segment lens I'd like to share with you. This slide on page 14 is really a reflection of progress around that pivot. which, as I said earlier, the priority segment has come from 27 to 45, which if you include the premium, it's around 55% of our income. They themselves then generate a higher quality of income on a product basis. Again, the wealth and deposits accounting for 56% of our income. These are non-capital consuming type of products, which we're very keen to continue to drive higher. Now, this is the other piece. Other than the segment, this is the geographic piece of participation. It is a very, very interesting and important slide because it highlights that diversity, the opportunity, and the quality of our franchise. My first comment on this slide, look at this slide. The first thing to take away is about 2/3 of the income is already generating returns in excess of mid-teens ROE. And these are in the kind of blue boxes here, right? The first two blue boxes. The first box relate to our two core financial hubs of Hong Kong and Singapore, where we have very, very strong market position. The wallet is good. We have scale. We have ability to drive relevance. And here we are very, very keen to continue to invest, to continue to gain market share in these two financial hubs. Okay? Then you have a second group. The second group are markets where we have very, very good relevance, very, very good scale, and very good local market share. In some of the markets, many of the markets we easily have around 8 to 10%. Kenya, Bahrain would be a good example. In some of the other African markets, including Botswana, Uganda, Zambia, then we actually have market share ranging from 15 to all the way to 20%. So we're not just even an international bank. We are actually seen to be a very strong local bank. Here, we have a very, very good proposition. The ROE of these markets are very, very good, are very, very high. Granted, though, that there are one or two markets which are going through some headwind, be it through regulatory changes or be it through some of the more macro political and currency factors. So we're very, very keen to make sure that we adapt our business model, we change our business model to make sure we protect the profitability we make from this group of markets. But these are markets that are very, very exciting. Then I would go to a bucket where I term them as turnaround markets. These are 6 very important markets to us: China, Korea, India, Indonesia, Malaysia, UAE. They are very, very relevant to our footprint. They are markets of strategic importance. However, today, they are simply not generating the level of return that we would like to see. And from our standpoint, we are very, very keen to make sure that we accelerate that very focus and pivot towards priority and wealth and to deploy digital to make sure that the cost to serve our clients there are strong. I'll just use the example of Korea. We talked a little bit earlier in terms of the progress they have made are very, very significant. I mean, we bought KFB, Korea First Bank, back in year 2005-06. And fundamentally, this bank used to be and has always been quite a strong lending-oriented bank, a very, very strong mortgage bank. And as a matter of fact, we've done year in, year out, very, very strong selling loans. Unfortunately, that's where we stop. So we have a very, very good client base. We have well over 2 million active clients. But we fail to penetrate these clients. And this is where we have been shifting resources from just a pure loan sales to also involve in the kind of product, advisory, relationship management. And we've been doing this over the course of the last few years. And we're seeing very, very strong momentum around their wealth management penetration, around our priority client growth. We're still not there yet, believe me. But then it's nice to see them making the kind of progress they used to make as big of a loss of over 300 million. And now they're on a small profit. That trajectory is very, very positive. I would say equally, we have many markets where Malaysia, I just had dinner with a very, very reputed Malaysian businessman. I've always grown up knowing you as a big, strong and friendly bank. You are the bank. And there's every room you should rebuild that very, very fast. The client affection is very, very strong. Ditto India, where we have that very, very rightful share. So given the kind of brand, given our kind of market position, how we implement, how we focus, how we have discipline around where we choose to invest and then serve is very, very critical in turning around these markets. We have a last bucket, which I coined them as network. These are relatively, in totality, not very, very significant. They only account for around 3% of our income. And these provide very, very good network value to our footprint. They provide good source of liquidity. And equally, they provide very, very interesting optionality for us when it comes to deploying digital. The use of Côte d'Ivoire, for example, recently, where we launched a pure digital bank, is to really use these as test beds to experiment digital solutions where, if successful, whether we can then redeploy elsewhere. Equally, there are interesting markets where, like Vietnam, which is a nascent market, but provides very, very good opportunity. Sri Lanka is a very, very important Belt and Road country. So these are markets that are very, very important network play, but also provide an interesting optionality in terms of usage of digital. Now, I want to refer back to where Bill commented earlier about retail being part of the network and part of a broader client franchise in the corporate space is providing a very, very important ecosystem for us to leverage on. I did talk about the network around digital, which is around testing around one market and redeploying that in other markets. The alliances and partnerships these are all key corporate clients, which either provides very, very strong product proposition in the case of a Pru or Allianz, but equally, they also provide very strong segment proposition, including an Asia Miles and Emirates in Pakistan, Shinsegae in Korea. These are very, very important clients which we partner with. These very corporates also provide a very, very large pool of their employees for us to bank with. And more than 50% last year, more than 50% of our new-to-bank clients came from either employee banking relationship or alliance partner, which is very, very substantial. And we're keen to continue to leverage hard on that very, very value of that franchise. On the flip side, we contribute last year around 27 billion of surplus liquidity for the group. These are high quality, 73% of them being in CASA. And it's very, very important for us to continue to drive that very, very liquidity support to the rest of the franchise. Right-hand side, I just highlighted two of the main, I would describe them as wealth corridors. Mainland wealth is a very, very significant, I would say, pool of wealth, which over time, our markets in Hong Kong and Singapore would be very, very good platform by which some of these mainland wealth can be supported. Ditto around NRI, Indian wealth, the usage of UAE, Singapore are core centers via which we can tap that NRI corridor. Early days, but these are all within our footprint. Our brand plays well to the likes of mainland wealth and NRI corridors, and we're very keen to drive harder in terms of tapping these opportunities. Okay, page 16. And we have, over the last few years, invested and rolled out a lot of products, initiatives, propositions, which I don't really intend to go through on a segment-by-segment basis. But I'll just highlight a few that are very, very exciting. I mean, Singapore last year rolled out the silver proposition on the STEP, covering the age 55 and above. And that has been a very, very strong proposition because that is one space that the market has not been as well addressed in terms of the needs. We have focused around the expat segment in China, rolling out online mutual fund, and we're seeing dramatic growth in terms of our volume. Rolled out personalized investment ideas, which is kind of robo-advisory. In Singapore, we intend to roll out more. Didier will cover a bit more. We also last month rolled out real-time onboarding in India. Again, early days, but so far the results are very, very encouraging. So these are some of the areas that we believe will continue to drive positive growth in the segments we wish to pursue. Equally, on the right-hand side, we have been focused, investing very, very hard around improving the bank's risk, conduct, and controls. These involve embedding a stronger risk appetite framework, and also, very importantly, enhancing our client due diligence capabilities, increasing governance, increasing control. As the bank strive to be the trusted advisor of our clients, we will not compromise controls for growth. That is a very, very important message we set for our teams. Now, finally, around the sixth component, sixth factor, which is on page 18, is how we're investing. We have, over the last few years, driven quite a substantial level of efficiency gains. These savings are being used to redeploy, and we have, as you can see, the cash investments between 15 and 18, total approximately $1 billion in cash. The way we invest has to be underpinned by the three principles. They have to either drive a seamless omni-channel experience for our clients. It has to make banking easier, again, for our clients, and also to invest to make us that very well-trusted advisor from a wealth standpoint. So these are the underpinning principles. If we look at the split by which we have invested in our capabilities, obviously we have a very, very core basics of improving the risk analytics infrastructure. But over and above, it's very, very targeted towards making sure that we invest hard in digital and invest hard in wealth platform, because we believe these are the very ingredients that are important to be a source of differentiation for the segments we wish to target. Okay? So I want you to be reassured that every dollar we invest are targeted, really targeted, with discipline, focusing based on these three principles and augmenting really the digital and wealth sharply where we believe we can derive superior return on investment and return on equity. Okay? Now, since these are the two areas that we are investing hard, I want to invite Alishan Zaidi is our head of digital, and then followed by Didier, who's our wealth management head. They can give you some color in terms of what we have been building over the past couple of years, and just to showcase how these things are being invested and landing in the various markets. So I'll start with Alishan.
Ben, good afternoon. I'm Alishan Zaidi, Global Head for Digital Banking. I think I've been with the bank for 23 years in various roles. Just building on what Ben has shared, I would like to give you some color on digital and leave you with three things. One, we are focused on making banking easier for our clients, as Ben has mentioned, and digital transformation is having impact, and I'll talk about that. Two is digital is enabling us to grow, to improve efficiency, and to disrupt in our markets. Three, we are partnering with fintech and big tech players to improve client experience. So if I turn to the next page, which is page 20, digital for us is a key enabler of our retail strategy. To deliver value for clients through superior client experience, it's really a major shift from moving from thinking products to thinking client journeys end to end. And it is really helping us reshape our business across our markets through differentiation, improving productivity and efficiency. We have been investing to pivot. So if you see, we were largely paper-based. We are increasingly moving to real-time and automated. We were really branch-led. We are moving to more digitally led. We were very manual on credit decisioning. We're really moving to more straight through. We have been developing centrally, testing locally, and rolling out globally. And we have made steady progress. So if you look at our global digital net promoter score, it has really improved to about 53 today. And it is now quite competitive. We are not best in class as yet, which is around 60 to 70, and that is what we are working towards. Also, our digital adoption has also improved from 33% to 45% globally. And again, in a few markets like India and UAE, we are 60 plus, which is encouraging, but really we want to be 60 plus across all our markets, and that is really what we are pushing for. And then if you look at our total service requests, they have moved to 50% straight through digital end-to-end, and we were 1% when we started this journey. This is really driving a material shift in both productivity and efficiency. So let me now give you some color on some of the stories we are seeing across our markets where we're using digital to make it easier for our clients. If I move to page 21, and I'll start with India, where we're working towards turning around our business. Clients can open an account in India using their national ID, real time, anywhere, anytime. Why is this important to us? India is a key market, and our branch presence is limited by regulation. And that is really the case for many other international banks as well. With real-time onboarding, customer due diligence is being processed entirely in an automated manner. Our cost per acquisition, as a result, has fallen by 90%. And this dramatically has increased our potential reach broadly on the same cost base. Then finally, on the right-hand side is our digital-only bank in Côte d'Ivoire. As Ben mentioned, this is a network market where we ran a test. Côte d'Ivoire has a population of 26 million and a mobile penetration of 65%. And previously, we didn't have any real retail business in Côte d'Ivoire. Similar to India, you can open an account in 15 minutes. Clients have access to 70 of the most popular banking services. We have developed and deployed this in less than a year. And really, once we've learned from all our valuable lessons in Côte d'Ivoire, we plan to leverage this across our markets, starting with Africa first, followed by the Middle East, and then Asia. If I then turn to some of our big markets and some of the initiatives happening there, Hong Kong and Singapore. In Hong Kong, we launched a very successful co-brand credit card alliance with Asia Miles. I'm on slide 22. We simplified online acquisition process, and this has really resulted in a 50% increase in online acquisition rates. In Singapore, we launched a best-in-class online equity trading solution, and Didier is going to talk more about some of the other things we are doing in digital in wealth. This has resulted in a 2 times increase in income and a 23% increase in monthly new accounts. This is really interesting because clients are finding it easy and convenient, and that is what is driving these numbers. I would now like to just move to page 23. We are regularly asking ourselves about the role of fintech and big tech companies and how we participate with them. With fintechs, we are selectively partnering. So here is really an example in Korea where we work with Peikey. It's a fintech that provides keyboard banking solutions and enables financial services, and our clients can transfer money instantly using popular messaging apps. And this capability is being rolled out into other markets. In Singapore, we had a real issue of not having enough ATMs, and it was a real pain point for our clients. We partnered with a local startup called SoCash, and we provided 400 additional locations to clients across the island, significantly increasing the network available in addition to branches and ATMs. With big tech players, we are connecting to participate in the large ecosystems. For mobile wallets, with Apple Pay, Samsung Pay, Android Pay, we are live in about 7 markets. On social channels, our clients can connect with WeChat Pay in China, WhatsApp payment in India. So really, in summary, I leave you with 3 things. 1, we are focused on making banking easier for our clients, and digital transformation is having an impact. 2, digital is enabling us to grow, to improve efficiency, and to disrupt our markets. 3, we are partnering with fintech and big tech players to improve the client experience. Let me now hand over to Didier, and he'll talk a bit about wealth management.
So good afternoon, everyone. My name is DJ van den Nicken, Global Head Private Banking on the Wealth Management. I joined the bank in 2016, and I'm really excited to be part of the growth opportunities in some of the most exciting as well emerging markets for wealth globally. Wealth management, as you heard from Bill and from Ben, is a key growth and return on equity driver for the retail bank. And today, I will present you 4 key messages about our business. The first one is that we have a differentiated proposition that we are continuing to enhance to capture high-quality growth opportunities. The second message is we have achieved good income momentum over the last decade with an increasingly resilient and diversified mix. Thirdly, we have very clear strategic priorities with execution well underway. And finally, we made good progress against our multi-year front-to-back digital wealth program. I'm turning now to slide 25. Let me talk about how our proposition is different. First, we have differentiated capabilities in advice. The second one, as Bill mentioned, we are open architecture. And we are open architecture right from the investment strategy through product selection. And we are very strong strategic partnerships with both insurers and asset managers. Now, these capabilities, taken together, are unique to our business. Our clients rely on us for an objective set of processes and services to provide unbiased advice with a trusted brand that has been local for a very long time. And as Ben said earlier, we have a truly unique emerging market franchise targeting the affluent urban clients for whom our international bank and wealth management capabilities resonate. And with these capabilities, we have achieved good income momentum over the last decade with a resilient and diversified income mix across bank assurance, funds, FX, capital markets. We have delivered 10% CAGR on income and 11% CAGR on AUM since 2009. And since 2014, with the retail bank's sharper focus on affluent clients, wealth management has grown its share of retail income from 20% to 30%. Moving to slide 26, we have a very clear set of strategic priorities. The execution is well underway. Our priorities are to further enhance our differentiation in advice, to digitize across all asset classes, to continue delivering client-centric solutions, leveraging on our open architecture, and importantly, to increase consumer awareness for the bank's wealth management capabilities. Finally, maintaining our strong compliance foundation, which ensures we can scale sustainably. Let me now elaborate on our digital program. And what we are building is differentiated in 2 ways. The first, we are building a holistic end-to-end digital investing experience for our clients. This across all asset classes, and as well as the mobile and the advisor channels. This will provide our clients a great investing experience, and this will help us to further scale up the business. Now, within this program, we are building several leading capabilities, be it personalized investment ideas, China mobile fund, mobile FX, or structured products pricing. And I will speak further about a couple of these examples shortly. So over the last 18 months, we have already digitized a significant portion of what is a typical investing process, which is from risk profiling to accessing our market views through placing orders for mutual funds and or equities. We are focused on giving our clients this integrated set of capabilities in all our key markets, so they get a best-in-class investing experience on any channel of their choice. I turn now to the final slide, 27. You have here 2 examples of demonstrated early success with the capabilities we have launched. The first one is our mobile fund offering in China, which is allowing us to increase our share of the massive online wealth opportunity in the country. Since launch of the capabilities, we have seen double-digit increase in fund sales on us, or if not more importantly, we have seen a substantial migration of our business to the mobile channel. Today, some 75%. This significantly enhances our advisors' productivity, allowing them to focus on advice and sales and not on transactional paperwork. This also leverages our competitive advantage with our offshore offering in the country. Our second capability, which we launched at the end of last year, is a first in Asia in the advisory space called personalized investment ideas. And we are now extending this capability to multiple markets. And what would take a relationship manager's hours to prepare a year ago is now delivered in minutes on an iPad. And this allows our advisors to create unbiased, tailored, and consistent advice for clients. Since its launch in Singapore, we have driven 44% of our fund transactions via this platform, and we have covered more than 8,000 clients in a couple of months. These are just two of the several capabilities we have launched for clients in the last 18 months, and the results so far are very promising. So we are focused on client adoption, continuous improvement based on client feedback, as well as the frontline feedback. We also believe that given the consumer behavior in our market, this is the right set of capabilities to strengthen our differentiation and improve client experience going forward. Let me recap our priorities and our competitive advantage. First, we have a differentiated proposition, and we continue to enhance it to capture growth opportunities. Second, we have a good track record achieving income momentum over the last decade with an increasingly resilient and diversified revenue mix. Third, we have clear strategic priorities, and the execution is well underway. And finally, we made good progress against our multi-year front-to-back digital wealth program. With that, I would like to thank you, and I will hand back to Ben.
Okay. All right. Thanks very much, Didier. So how does all hang together, and what can you expect from us going forward? I think very clearly, number one, you should expect us to continue to focus on our areas where we are competitively advantaged, areas where we have a strongest point of differentiation, which is in the emerging affluent segment. That pivot will continue. Secondly, you should expect us to invest in digital capabilities, where we want to improve the way clients transact with the bank, which is banking needs to be made easier for our clients. Thirdly, you should expect us to drive hard around improving that liquidity surplus generation to help support the bank's overall funding. And from a financial standpoint, you should expect us to deliver a mid to high single-digit income growth over the medium term on a CAGR basis. And you should also expect us to continue to drive very tight cost control to support the group's overall cost target, whilst be very disciplined around how we invest. That investment has got to continue to improve upon the way client has experience with the bank. Okay, so in totality, the team and myself are confident that this business is capable of delivering a sustainable mid-teens ROE over the medium term. Okay, so thank you again for coming. That wraps this plenary session. I'd like to hand over back to Mark.